Welcome to today's episode of It's a Numbers Game. I'm your host, Adam Morris, and I'm joined by my co-host, Daniel Welling. In this episode, we are diving into the future of payments with Kevin Ludford. He's an expert in open banking and payment systems, and he brings a wealth of knowledge from his work in revolutionizing how businesses manage payments, particularly with variable recurring payments. And we're excited to explore how this new technology can benefit MSPs. So today you can expect to learn how open banking is transforming payment collection, moving beyond traditional direct debits, the key advantages of variable recurring payments and how they can improve cash flow for MSPs, and why adopting these new payment systems can offer faster, more secure transactions and reduce friction for businesses and customers alike. So stay tuned as we explore this exciting world of open banking.
Kevin, welcome to the show.
Good afternoon, gents. Thank you for having me.
You're very welcome, and as is customary with our recordings, we should have clicked the record button about 10 minutes ago, but Adam and I have been thoroughly impressed with our history lesson and technical understanding of what we thought was quite a straightforward topic in terms of direct debits. And we're really looking forward to educating our audience during this episode in terms of what's coming down the line and some general good hygiene around collecting and managing payments, and ultimately the positive impact on MSPs for their cash flow as a result of that. So, Kevin, where do we start on this? Perhaps tell us a little bit about direct debit and what and how it might change in the near future.
Yes, certainly. So I guess our background as a business is really within the open banking sector. So many of you may or may not be aware of open banking. As I mentioned earlier, most of us business owners or people that will have the joy of interacting with HMRC will have noticed that their sort of default payment collection is pay by bank now. So anyone that's paying any form of return. And HMRC, I think, maybe are still the largest single user of open banking payment collections in the UK. So it's a very sort of tried and tested mechanism to take an instant bank-to-bank payment. So initially when open banking was launched, the real focus was that faster single one-off payment. As I say, paying a return, paying an invoice, being able to pay somebody instantly. And the benefit being the transaction, in a way you could draw some similarities to paying on your debit card. Money comes out your account, goes directly into the receiving account using faster payments. And effectively, the open banking mechanism uses the same. There's no intermediary. No one holds that money. It leaves one account and goes to the other. And the way that payment is set up is a secure payment call between the two banks. But I guess the scheme and the industry always knew that there is other benefits of using open banking. And one of those was to look at how could we use that in a recurring model, taking direct debit. So any organization that has a subscription, recurring billing on a monthly basis. And therefore there's been a lot of work going on in the background in the industry to launch an alternative. And it's coming to market after many months of development. In fact, the capability has been available for some time, but it's used very much internally by the banks for potentially moving a variable amount of money from one bank account to another account that's owned by the same individual or business. But the term itself is called variable recurring payments, or VRP. And the name is in the title, really. It allows you to collect a variable amount on a recurring basis. And as I say, that's been available for some time. And what's really exciting now is that the scheme itself is actually coming to market really as an alternative to the direct debit scheme that has clearly been in place for many years. Direct debit's a tried and tested form of setting up recurring payments. But being able to leverage some of the benefits of open banking for variable recurring payment collections is really what's driving and what will bring the benefits to those businesses. So things such as no need to present a direct debit mandate, for that customer to fill in first. The fact that they can simply authorize that recurring collection via their bank app. So just removing that friction, knowing that mandate then hasn't got to be set up by the bank, which I think is still 5 to 10 days before that first payment can be collected by the business. So imagine as a business, you get that initial payment instantly. And then when the recurring amounts come out, as I say, which can be a variable amount, they are paid as an instant or settled as an instant payment. So say if that's due to leave my account, today at 3:00, then you'll receive that same day, instantly. Whereas again, with direct debit today, there is a delay in that settlement. So it's really about just the simplification of the setup, the speed in which both the receiving party will get paid, and then just having that flexibility within the ongoing variable amount. So hopefully when it comes to market, it won't be called commercial variable recurring payments. We at FumoPay are one of the 32 organisations in the UK as the initial funders of the new entity. So there's a new legal entity that's been set up to manage the scheme. So organisations like FumoPay, other open banking providers, and the banks. And one of the tasks of that organisation is actually to bring a brand or multiple name to market that consumers can understand and adopt. Something like secure debit or something in that nature.
Well, surely if it was faster payments before, it'll be ultra faster payments or super faster payments or something like that. Anyway, I was just going to 2 questions. To what extent is this outside of UK jurisdiction and the global process? And secondly, when does this become a thing? When can we start to use it?
Yeah, certainly. So CVRP currently it's a UK initiative. So it's part of the UK Open Banking Initiative. The UK has led the way in open banking for some time. Clearly, the adoption of open banking and standards has grown significantly across many geographies now. But really, this extension of the open banking standard is very much a UK focused. As I say, think of it as a really powerful alternative to the direct debit in terms of collection. And we are looking at Q3 this year, which is not far away. So there is what's known as Wave 1. So Wave 1 is really opening up to a number of sectors, first off. So energy, charities can really take advantage of this. Financial services, particularly those that are governed by the Financial Services Compensation Scheme agreements. And then very quickly after, the mission is to open that up to really e-commerce based subscription and beyond. Really, so that's where it really starts to get exciting. And just being able to bring this mechanism into many forms of how businesses interact with their clients, where they want to get them signed up. For us, what's exciting, not just this scheme, but just how businesses can start to leverage open banking. One of the things, as an example, that's available today is what's known as account initiation services, or AIS. And that's the ability for a customer to link their bank accounts. It's often used for people that are maybe applying for a mortgage, applying for rental, where they want to do some form of validation of who that individual is, or maybe some form of credit assessment. But using that technology to pre-populate, so you haven't got to fill in data fields, and then knowing that that person has a valid bank account, we've validated them, they are who they say they are, that either receiving bank or so you've got to maybe make a payment out to has been validated, and then using things like VRP to then streamline how you then take ongoing collections. So it's a component of, but I think part of a bigger opportunity for businesses to leverage.
The next question I have in my mind, and one of the inherent risks of the direct debit model, was this always present looming clawback option that happened. So I've been collecting £5,000 a month from my client for 3 years, and they could actually turn around and say, actually, no, I never authorised any of this. And suddenly you've got all that money being whipped away from you. Any thoughts around how that might work with the new scheme?
Yeah, certainly. So it's really part of, I would say, the entities. One of their initiatives is around the consumer protection. And certainly, the entity is made up of organizations like, as I say, like FumoPay. We're classed as a TPP or a third-party provider within the open banking industry, but you also have banks as well. And for the banks, ensuring that their customer has the right level of protection is paramount. So I think what we've found is, and it's interesting you raised the direct debit guarantee, because, very few people are aware that is available, but you're absolutely right. It is. And you have that option to call back. And therefore, what we want to ensure is that the consumers will just assume that they are protected. And that's the point. We want to make sure that they are protected. They're not necessarily going to go, am I going to, not everyone reads the small print, not, when this gets presented to them. But I guess the real point is that those protections need to be in place, on both sides, making sure that, whoever's setting up those payments in the first place, has gone through the right level of onboarding and controls, but equally from a consumer perspective as well, that they have the rights. And it's a key part of the initiative that will be announced really as part of launching the scheme. I can't say that it's going to be identical to what's available today, but it's a huge part of the initiative to really make sure that there are no barriers to adoption by consumers.
And I guess the immediate benefit I see of this will be removing that lag of the direct debit is collected from your client's bank, but it sits in someone else's account, rests in their account, shall we say, until it arrives in your wallet or account. And this being instantaneous means that if I collect on the first, I'm receiving on the first as well, which is a great advantage. Am I likely to pay a higher price than I do currently for a direct debit collection, though?
Sure. So as I say, so as the organizational business that's going to be running the scheme to collect those payments, then it really is about being able to onboard your customer much quicker with less friction. As I said, no forms to complete. And also their ability to take that first initial payment and then the subsequent payments, they're instant payments. Again, it uses the sort of open banking mechanism and faster payments to speed up that process. So there is no lag. And as I say, money should be going from one account to the other. From a commercial perspective, equally, there should be some commercial advantage for the businesses and entities as well. And that's, again, something that's being discussed internally. And there'll be a commercial model that is presented to make sure that it's both, has not just speed and cash flow, but commercially beneficial as well for those organizations. So, there should be a reduction in there, potentially there. If they've got using a direct debit service today, again, there should be some commercial benefit for them as well annually.
So are we saying if we take the case of go cardless and the way they use direct debits today when they provide a slick service, but they're benefiting from the interest over that period of time, then presumably if they're going to use this mechanism at some point, they would lose that. Hence, their commercial model will have to replace that somehow. Oh, is that what we're saying?
Yeah, I mean, they are no doubt will be bringing CVRP to market as well, and that would make perfect sense. As you say, the commercial model will change. I believe they charge on a percentage basis and a fee, and that may change, that may go away. I think what it does do is it opens up the market to bring competition in, to allow people like FumoPay as TPPs. We'll really have a huge backlog of organisations that want to take advantage of CVRP, and that will be the same across the industry, really. And I think it's not just looking at, I think where it gets really exciting is where you could combine that with an overall improved user experience or user journey. Maybe you may, before you set up that direct, the setting up of the recurring collection, maybe at the end of a onboarding process, which has involved maybe credit decisioning or, some other set of data analysis first. And then you're just, again, automating the collection of those funds. We look beyond that. So what if you could do sort of, predictive arrears intervention? So again, if you've got bank accounts linked, you can, as a TPP, we get access to bank data. It's not like someone's given us their bank account. We look at certain data profiles. Can we predict if someone's going to miss that direct debit? And what if that we were able to automatically move that by a day or two? Because again, the whole driver, I think, around open banking is, yes, it's bring sort of a competitive element to it against things like the card schemes for sure. But actually, it's about how can we improve and enhance business cash flow, the lives of business owners, the lives of consumers. Are there smarter things that we can do rather than it being, I've missed my direct debit payment on Friday because my money didn't land until the day after. What smarter things that can we do with the data? So we, I guess certainly for FumoPay, we look beyond just this as treating it as a single payment scheme to just collect money. It's actually what else we can build around that to make it much more beneficial.
Would you mind, for my benefit, because I'm a bit thick, going over what you just said? You painted a scenario. The words went into my brain, but I'm not sure I fully understood what you said. So could you say it again about that particular scenario of a direct debit payment failing, but how this is smarter and how it can apply some level of intelligence to be successful?
Yeah, sure. So I think, the scenario is, if you've got a regular payment coming out from your account, but we or, whoever the service provider is, could predict that there's a, high probability that your cash position isn't going to cover that direct debit. Okay. And that's, again, using open banking, having that connectivity with that monitoring of that bank account for their money in, money out. And then maybe having the ability to alter the date of that direct debit. What if you could move it out by a day so you knew that it was going to be collected? Because generally what we find, we do, a lot of work within arrears collections and helping organizations try and automate that process. And just the cost and energy that goes into having to chase arrears and deal with missed payments. Direct debit has some benefits already. It will recall money after a period of time. But what if you could work smarter than that? And as I say, that's really what drives FumoPay as a business. We're looking at combining sort of data and payments to deliver better outcomes, not just, hey, this is a way of replacing direct debit, if that makes sense.
So in that scenario, it would go, the payments failed or is likely to fail actually because their balance isn't high enough. But I kind of know on the 2nd of the month, a load of payments come in. So I know that it's probably good to try again tomorrow. So I'm going to do that and maybe tell people what's going on. I'm not going to just completely stop working and say it's failed.
Absolutely, yeah. And I'm not. And to be clear, these are the sorts of solutions that we are building. So that doesn't come with CVRP, but being able to have that ability where maybe with direct debit, it's much harder to move that date as quickly as we can using our open banking APIs. There's been much more flexibility in the APIs that are used to drive the service than there is with, direct debit, because it's obviously a much older, legacy payment service. So, what if you were to miss a payment, but you could then allow the customer to repay that arrears amount, say, over 2 weekly installments, and you can automate that collection. There's a lot of things that we can start to look at. And I think this is where it, as I say, certainly for us, it becomes much, much more exciting. And I guess ultimately what's evolving in, open banking into open finance and open data is, being able to then look at other data repositories that you can access again to make decisions on. So, there's a lot of, opportunity work coming downstream, certainly within the space. It's not just about, a payment scheme, if that makes sense.
We'll come back to the podcast in a minute, but first, I just want to introduce you to the mentoring service from MSP Finance Team. How long will you carry on struggling on your own, juggling cash flow, feeling like you're barely making ends meet, when the very reason you started your MSP was not just to help others master technology, but also to secure your own financial future? Or perhaps you've grown your MSP to a good size and are looking to prepare for an optimal sale or acquisition, but have never done it before. We've walked in your shoes. We're ex-MSP owners and have built our businesses from startup to exit and know exactly how it feels to be constantly firefighting or struggling to grow profit. And that's why our mentoring, or call it coaching if you prefer, exists to help you achieve the rewards you set out to achieve in the first place. More profit, more time, and the freedom to focus on what truly matters. So you're probably asking, why should we work with you? Well, we deliver results. Here are just 2 examples. A 10 million MSP with a 7-strong leadership team, but lackluster results. Within just 2 quarters of working with us, their profits began to climb. At the end of year 1, their profits will have jumped from 300K to 1.3 million. But we're not that big, I hear you say. Well, we work with smaller MSPs as well. A 400K MSP was suffering a 10% loss before we engaged with them, and were struggling to move forward for years. Again, within a 12-month period, we've turned that business around. They've got new clients, they've got their mojo back, and they made a 10% profit this year. If you'd like results like this, book a free consultation now at mspfinanceteam.com, and we'll discuss a burning issue that's been holding you back and give you several key actions to take away and implement completely free of charge with no further obligations. Don't settle for less. Make your MSP everything you dreamed it to be.
Sounds really interesting. As a collector of money, I like the idea of being able to dynamically change the collection date to improve my chances of being successful. As a consumer, I don't think I'd like that though, because I know everything's going out on the 15th, so that's what I'm working to make sure that I've got enough money in to cover. And you come in and take it on the 5th, 14th, and then someone else has got the same thing they take on the 13th. Suddenly, we're just shifting my pain, but I can see how, coupled with the last part you described there, some form of automated intervention. Hey, Daniel, this payment isn't going to work, but we can see you can probably do it in 2 parts, one this week, one next. Do you want to do that? And that's super, because that also saves me time as a consumer. I don't now have to ring the call center and then queue up and then explain my financial misgivings and beg for mercy. It's almost a predetermined intervention that's all quite modern and prim and proper. So that sounds like a real progress. So, going back to that whole about what you're actually paying for a transaction, I've had many conversations with people that when we're looking at their monthly management accounts, and they're like, "Oh, how much are we paying to go cardless?" And generally, my response is, to be honest, you've paid that to mean that you've got the money without having to chase it. So I think it's great value for money, regardless. And even if you said to me, Daniel, the cost of transactions are exactly the same as they were for direct debit, but you now get it 3 days earlier, I'd be happy with that. But hopefully no one's listening to this. And your second point about there'll be more competition and hopefully prices will come down. But yeah, I'd be happy just with a quicker payment and the frictionless sign up as well. That's definitely something that we've had to manage as part of our onboarding. So yeah, interesting to hear the cost might come down and the convenience improves as well.
Yeah, absolutely. And as with, I guess, when we talk to business owners, they have a perceived value based on maybe the sort of pain point of that service and cost to them. But yeah, it's not always about, and I think, particularly within the payments industry, you never want to be in that sort of rush to, the bottom, so to speak, in terms of, the fees. It's about the value that can bring. And as you say, it's not always about the fees. We generally find that the fee conversation comes up more in comparison to card processing. And, again, one of the benefits with open banking is because it's not mandated by the card schemes, then you don't have those base sort of interchange and scheme fee costs. So what we always say to, our business customers is actually, if you look at it overall by bringing in open banking, even for one-off payments. So, we do a lot where it's integrated into, the ability to settle invoice instantly. And you start to steer your customers, because cards won't go away. I mean, we actually have an integrated gateway because we know our customers, certain customers, their clients still need to pay by card. And we fully respect that. And we see both working, symbiotically together. In fact, I'd like to think that we were the first open banking TPP to integrate card into our journey. Maybe we aren't, but I certainly, a lot of it was always cards were the arch enemy, and this is about pay by bank. But for us, it needs to coexist. But it's how you start to either educate your clients to pay by bank versus pay by card, or maybe incentivize them. Because what we have found is that if an organization hasn't accepted pay by bank today, as soon as they start using it, they love it, and they love it because of the instant cash settlement. Is put the fees aside, it's the fact that money is in the bank. We've had customers, even accountants, that have signed up. We've approved them. They've connected their Xero account. Takes like 30 seconds. They've sent invoices and they've received settlement of those invoices within 2-3 hours of opening up an open banking. So it just shows. That's what I would say to organizations. Even a small business, you can deploy this very quickly and get the benefits of pay by bank, almost immediately. And it's having that cash flow is by far one of the biggest drivers, as you say, not just maybe a reduction in fees.
Does this kind of, just trying to get this straight in my head, but where do debit cards fit now then into this world? Are they no longer kind of needed? Are they some kind of middleware that doesn't have a purpose now if we're going direct from bank to bank?
Yeah, potentially. I mean, I think it's where those debit cards are used. So, often, I say to organizations who are interested in leveraging open banking for payments, you've got to pick the areas where it's going to bring convenience either to you and the customer. So, we always reference these things, the mobile card readers, and anywhere where you tap and pay, it's very hard to try and demonstrate that, you're a much slicker solution with open banking. And you just got to be open and genuine with that. We have a lot of customers that, use QR codes for collecting payments. Whether in person, we have a mobile payment app, which is about collecting in-person payments. And if you've got an environment where someone doesn't need to tap and they can pay by bank, then you're absolutely right. There isn't really the need for the debit card. In a way, the way to think about an open banking payment is it's the equivalent of a debit card payment. The money's got to be in the customer's account that's paying first. So any scenario that you take debit card payments where it isn't about tapping and going, then you could use open banking. Obviously, with an open banking payment, one of the benefits the merchants has is reduced fraud and reduced chargebacks. So if you have a merchant that has a high propensity of card fraud, then you eradicate card fraud overnight because there is no card. There's no ability to clone that card and use it elsewhere. The second is chargebacks, because the way an open banking payment is based around the person that's paying using the authentication method they have set up with their bank to approve that payment. The bank knows it's them. It's very hard to claim that I didn't make that, payment to Daniel, today, if I've authorized that via my bank app. So, banks, in a way, I think, like the value of open banking payments because it's really going to drive down that level of sort of fraud and chargebacks. So, for us, plastic cards will still be around, but it definitely more so predominantly for credit necessary than debit.
Yeah.
Really.
So that just came to my head because at the weekend I was working behind a bar at a festival and we were taking payments via SumUp.
Yep.
Phone, just an app. So iPhone to iPhone, and it's like, hang on a sec, that was a bit easy. And so it's effectively, a Fumo Pay. Is that the same, or could it be the same, but without the card sitting in the middle, effectively, which you've aligned to your bank already on your phone?
Yeah, it's not quite there yet, certainly with NFC technology. So, Android and field communication. So the ability to tap. I'm not the expert in this. It's more for our technical team, but I believe that that capability exists with Android devices, but there are some restrictions with Apple. But it's an area that we're looking at where actually you can tap to pay. The difference being, I would say, is again, just being really clear, is you still need to authorize that payment via your bank app. But often what you'll find is any card payment, you may be directed back to your bank app to authorize a payment on card today. It's becoming much more popular. Again, it's around, using two-factor authentication to make sure that's a legitimate payment. And often we find, we're saying those, where people are in a queue, they're most likely doing this at the same time, looking at their phone, doing something on their phone. So, they tap, pops up, that bank app opens up, they Face ID. It's not much quicker. It will come. I'm convinced by it. And I think it becomes a generational thing. And ultimately, coming back to the CVRP scheme, I guess the term that we're starting to use more regularly now in the industry is bank on file. So it's really about saying, I'm happy to pay with by my bank. I don't need a card. I've got bank on file to pay from, so I can tap to pay. So yeah, it's not there yet. And as I always say, if I'm running through London yesterday on the Underground, I'm going to tap. I want to go, but actually, if I've got as a bank on file, I've already created that account, then it's going to be a very similar payment journey. So.
Really fascinating conversation, and I think my final thought on this is that as a typical small business owner, I want my cake and eat it. So I think I want to collect money owed to me using this new scheme, and I want to pay all my suppliers on my credit card, for which I attract and collect points. So is that allowed?
It is interesting, but certainly when we get to where we see cards used, there is such a driver around points collection. And I won't mention the usual suspects, but, and until an alternative scheme comes with some of those benefits, as I always say, there is nothing free in life. So someone's paying for those fees, for sure. Similar to, dare I say, the recent PayPal promotion. That 3%'s got to come from somewhere. So yeah, it's those things drive behaviour. At the end of the day, people will be motivated. As I say, what we, certainly with a lot of the small businesses that we work with, and SMBs, it's just trying to use some of the advantages of open banking, particularly around, let's say, arrears collections. Why not offer somebody to split that over, say, 2 or 3 installments, automate that as a payment link, get it set up straight away. We also have a feature which we call Pay Save. So that's the alternative, which is incentivizing someone to pay early, so having a timed discount applied to a bill. It's similar to invoice discounting, maybe not as popular. I think it's quite sector specific, but it's just looking at different mechanisms to try and help, or make it easy for your customers to pay you. And that's what I say with open banking. Look at how you can leverage it to get paid faster, and generally at lower fees.
Super. Well, I'm sure we'll have you back on the show again, maybe the end of Q3, Q4, to tell us how the rollout has progressed. Adam, any final thoughts from you before we?
Nothing insightful.
No.
Still trying to get my head around all this good stuff. No, look, this stuff is starting to move quicker, isn't it? It's starting to gather some pace. It's great that the UK are a leader in this area as well. I think the US are sort of lagging behind us, if I understand that correctly. Yeah. So that is something, it is something we're good at. And if we can remove friction for procuring and selling services, then, even better for everybody, especially small businesses, right? Who don't have the time for this, certainly don't have the time for chasing debts and those sorts of things. So for me, this is all about efficiency, automation, integration, having clear clear understanding with clients, being sort of at the front of this and sort of explaining to clients you're at the front of it as well. We're all tech businesses, right, in the MSP world. So surely we should be on top of this, having these conversations with the clients. We're not back in the early noughties with 2025, 2026 now. We're now on top of all this technology. And in fact, Mr. Client, we recommend you do the same with your clients. Would you like us to sit down, talk to you about this technology, how it can integrate into Xero? Maybe we can help your finance team put this stuff in place and help you collect your cash quicker as well.
Yeah, absolutely. I think it's just the adoption, curve, is really accelerating. And what we found, 12 plus months ago, you talk about pay by bank. As I say, people may, you've then got to explain it. The most common response we get is, I just paid my Amex card using that the other day. I'll get it. Oh, that's the mechanism. So it is becoming much more widely adopted. I think, if anything, if there was a net negative from the industry, is it really hasn't been communicated as well as it could have been in terms of what the payment scheme aims to, all the benefits that it can bring, both to the consumer and equally to business. There's often debate about the term open banking. The word open and banking, will cause some people to run and hide and not go anywhere near this sort of area of innovation. But generally there's been a lot more that can be done. And I think the goal or the mission of the entity that's launching CVRP is really to make sure that we've listened to maybe some of those, or learned from some of those mistakes in the past. So we can really ensure that when this becomes more widely adopted in the hands of the consumer, that they feel, that it has the right level of trust, they feel secure, they feel confident using it, and it just becomes a day-to-day mechanism. Final point, what's most interesting is, for anyone that, if you travel around Asia, pay by QR code, pay by bank, it's so widely adopted in many other, global geographies. But what has, I think, helped certainly the acceleration, particularly paying by QR code, is just the advent of COVID, or sort of post-COVID. Suddenly, as we know, QR codes have been around for years, but, we would never think of scanning one with their phone and then, interacting. But, off the back of that, certainly it's become a little bit more of an accepted way of interacting.
That absolutely petrifies me, though, that we've had it banged into us about careful of QR codes, making sure you know the origin of them, who am I sending the money to? But maybe that's a topic for another day. It's been really interesting talking to you. If anyone wants to carry on the conversation before you join us again, how best to get hold of you?
So, my email address is kevinl@fumopay.com, FUMOPAY.com. Always love to have a chat, just share advice, guidance, any insights. Always open to help.
And a fellow motorsport fan and petrol head, so we'll definitely be doing things in the future. So, Kevin, thank you very much for your time, and look forward to speaking very soon.
Likewise, Adam, Daniel, thanks very much. And really enjoyed that and look forward to speaking again.